What's going on, you guys? My name is Daniel, and here on this channel, we talk about Canadian stock market investing. We focus on growth stocks, and for those of you who've been following my channel, you'll know that I was in the middle of a move in the past week. So finally, we've moved in, and things have been settling down for the most part. Still got a few things to do, and things like setting up the studio. Right now, it's fairly incomplete, but things are going to come in slowly over the next month, so you'll be seeing a better and better set. If you're interested in a house tour or anything like that, let me know in the comments down below, and if there's enough interest, I'll consider doing that. Before we get into this video, I've got a quick announcement. My brother and I, we recently started a company called Leave Gun, where we're selling these massage guns. If you guys are working at home and feeling the soreness on your back or from your shoulders, just being in the same position all day, you can use this massager. You can turn it on from the bottom, and you can use it on your shoulders, on your forearms, on your legs, on your neck even. If you're interested in that, I have a coupon code down in the description where you can get $40 off. And this is our Black Friday sale, but I'm going to extend it toward you guys, my viewers. Now let's move on to the company that I'll be talking about today. So the company I'm talking about today is Docebo. And the reason why I'm talking about this company is because I think the stock has the potential to at least 2x, if not 3x in the next couple of years. The story for Docebo begins with the fact that learning doesn't end once you leave school. It actually continues on in your workplace. As the world continues to evolve, processes in the workplace as well as products that we use in the workplace continue to change as well. Also, people change jobs, so they need to be able to ramp up on new tools and new processes in their new workplace. And the old school style for how people learn things is either through peer-to-peer mentorship or through training sessions. Most commonly, training sessions are done for things like new processes or new tools that are being introduced in the company, as well as for customers who are looking to purchase enterprise products. They'll often send employees to get trained on how to use this new product that they're purchasing. Usually, these training sessions have an expert or a group of experts who teach the learners what they need to know about the tool or the product. There are multiple costs that come along with these training sessions, like paying for the expert's time, paying for the attendees' time if you're a customer sending off your employees. You also have to pay for food often, like there's free lunch or maybe even free dinner. Also, if you're a customer needing to travel to another site for this training session, you're going to need to pay your employees for their food, for their travel, as well as their lodging. Docebo is innovating in the space by creating the best in-class enterprise training platform. Another name for this is Learning Management Systems, or LMS. On this platform, experts can upload videos of themselves teaching a specific topic, and this can be distributed to learners on the platform. So for example, a mechanic shop might use this platform, have an expert film a video of himself doing an oil change, all the best practices, which tools to use, and the places where you can find these tools, and they can upload this video onto Docebo's LMS. And every time they bring in a new mechanic as a new employee, the new employee can go into the platform, look up this video on how the mechanics in the shop do oil changes, learn everything from that video, and get started right away. This ultimately saves time and money for a company where they don't need an expert anymore to teach every single new employee how to do oil changes in their company. Another advantage is that when you teach through video, the video can be edited and more succinct, instead of having a teacher maybe ramble through some content that he's not very familiar with, and then end up stretching a half an hour lesson to be a full hour. It's kind of like this video right now where I'm filming, going through my notes, and doing a lot of cuts and edits. Docebo's platform also allows customer training to be done remotely. So instead of customers flying their employees into the headquarters of the company that's selling a product, they can just have their employees learn remotely from their desks. Most people who attend these training sessions forget 90% of the things that are talked about unless they write notes down. So with this LMS platform, it allows learners to rewatch videos if they forget things. One other thing that I didn't talk about earlier about their platform is the social aspect. And what this means is they not only allow experts to upload content to the platform, they also allow learners to upload. And I don't think I know of any other learning management system out there that allows learners to upload content. And why this is powerful is because learners, once they learn a skill, they're going to put it into practice. And as they're practicing that skill in their job, they're going to learn different things along the way. And maybe there's certain quirks of a product or a process that they find, and they want to be able to document that. The traditional approach right now is to put up a wiki page on certain things and hope that people can understand what you're conveying through text or pictures. But with video, The power of video is that you can show things in real time, how it's done, instead of having to describe it or have pictures with numbers and circles on it, and people are sort of confused. So I think that with experts and learners contributing to this platform, it makes this learning platform all the more enriching for new people coming on and looking for content. It's kind of like YouTube. If Google only had their own employees upload content to YouTube and hope that people will watch it and get advertising dollars, then YouTube would fail. But the fact that they allow anyone to upload content about almost anything, this has grown the platform to become one of the top places where people search for information, like you right now are searching for Canadian stock information. I think that Docebo's platform is going to be huge going forward because of this whole pandemic and post-pandemic. A lot of companies have decided that they're going to move most of their workforce to work from home instead of in the office. Maybe they have like half and half split, but the fact that more people are working from home or forced to work from home, it's a lot more difficult to do training sessions in person or even just through things like Zoom or Google Meets. So Docebo's system is very important for a lot of their customers to transfer knowledge from experts to the learners. Now that we've talked about how Docebo is innovating in the enterprise training space, let's talk a bit about the important news that has come out recently about the company that possibly caused the stock to pop up. So I think there are two things that have really forced the stock from the $60 or $50 level up to the $70 level that we saw recently. The first piece of news is that the fact that they're being listed on the NASDAQ exchange. And this is probably going to happen maybe mid-December or early January. If I find out the dates when I'm editing this video, I'll leave them up on the screen. With the IPO of Docebo on the NASDAQ, this is going to bring the company $125 million in proceeds, with an additional $18.75 million being brought in if the underwriters buy the over-allotment shares. So this could bring in a total proceeds of $143.75 million into Docebo's cash pile. And already they have a $60.8 million cash pile. So this is bringing the total cash up to just over $200 million. This is going to be more than enough cash for them to continue hiring people to develop their learning management system platform, as well as hire more salespeople to pitch the product to other enterprises out there. And I think another thing they may do is use it for acquisitions. With the listing on the NASDAQ, this brings in a greater pool of investors that will have eyeballs on this company. And Docebo is quite an impressive company if you look at its one-year performance. It's grown over 300% in a single year. I think when I started looking at it, the company was around $44. And before that, it was at $20 early in January 2020. So this company has had massive growth, growing from $20 to about $68 per share today. And I think that when they list on the NASDAQ exchange, and there's more coverage on the company in terms of the news, or maybe on YouTube, we're going to see a lot more retail investors take watch of this company and possibly invest in this company and push the stock price up just because of the future possibility of a 3 to 5x return, or maybe even a 10x return in 10 years from now. I think that it's very possible for Docebo to have a 10x return over the next 10 years, looking at the current market cap of around $2 billion and their total addressable market at $13 billion today, expected to grow to about $25 billion in the next couple of years. I think that learning management systems could be a $50 billion market itself, because going forward, we can see that it can reduce costs for companies as well as minimize the knowledge transfer loss. It reduces costs in terms of employees' time, as well as the little expenses that come along with training sessions. And it also reduces the amount of knowledge lost because you can go back and rewatch these videos over and over again. If we turn over to the Q3 earnings, we can see that Docebo's platform is being adopted by more and more customers, as well as their current customers are expanding their business with Docebo. First off, if we look at the revenue, we can see the revenue grew about 52% year over year to $16.1 million. $15.1 million of this is recurring revenue, which means that 94% of the revenue in Q3 was recurring revenue. And as investors, this is what we like to see because this makes revenues predictable. At least it puts a floor to their earnings, and the ceiling is sort of the sky's the limit. So if their salespeople do very well, they can capture more and more recurring revenue, but the chances of them losing revenue the next quarter is very slim because customers are usually locked in for at least a year or a couple of years to their product. The annual recurring revenue as of the end of the quarter is $64.6 million, and if you multiply the recurring revenue for Q3, it doesn't quite add up, but this is probably because they added customers in the middle of the quarter. So they didn't get the full quarter's worth from those new customers, but going forward, their annual recurring revenue has already increased within the quarter, and this is a 55% increase year over year. Looking at the profit margins, it's kind of like any other software company. They're super high, at 82% profit margins, meaning the cost of goods sold is around 18% of the revenue, and the remaining 82% they can use for other business expenses like overhead, engineering costs, HR, and salespeople. The net loss for the quarter was $1.2 million compared to the previous year's quarter at $3.7 million, which shows that Docebo is becoming closer and closer to profitability. At this point, it looks like next year they're actually going to turn a profit unless they go through some super growth stage where they double their employee count, expand the number of offices they have, etc. If we look at Docebo's customer count last year, it was sitting around 1,600 customers, and this year in Q3, they're sitting at just over 2,000. So this is an increase of 25%. Also, their average customer revenue has gone from 25.5K to 30.9K. So we can see that this went up by around 20%. With Docebo's customers increasing by about 25% and the average revenue per customer increasing by about 20%, this is how we get to roughly around a 52% increase in revenue year over year. Some of the notable customers that Docebo has are AWS, Uber, Walmart, HubSpot, and Thomson and Reuters. And in the previous quarter in Q3, they actually just signed on Amazon AWS, which is a huge boost for them. Amazon is using Docebo's platform to roll out customer training on the AWS platform. So I think this is going to be huge for Docebo because this is probably at least 100K contract per year, if not maybe in the millions of dollars. And if they do well with AWS, who knows, they might expand into the Amazon warehouse where they train employees there on how to do things in the warehouse, or maybe into the Amazon engineering sector where they do all their software development and hardware development like smart home devices. The last thing that I want to mention before I go into what I'm planning to do with Docebo going forward, whether I'm going to buy, sell, or hold my position, is the management team. Claudio Urba is the director, president, and CEO of Docebo. On top of this, he was one of the founders in 2005 when the whole business started. Joining him is Jason Chapnick, who's the chair of Docebo, and he owns the majority right now. I think he owns roughly over 50% of Docebo, which is huge for this company. And across the entire management team, they own roughly around 70% of the company as of their IPO. So with management owning a large portion of this company, over 50% of it, we can be sure that management is going to do the best thing for the company that they can because they're fully invested in the company as well. And that leads me into what I'm doing with Docebo. So I think I'm going to continue purchasing Docebo because I believe this company at $2 billion is cheap when we're looking into the future. Looking at the current metrics of the company at $64 million ARR and a market cap of around $2.1 billion, it's quite expensive. But I think that if they can bring their annual recurring revenue to even $200 million, which is very possible in the next couple of years with their new expansion in the US and all of that jazz, I think this company could easily command a $4 billion market cap in the next couple of years and maybe even more than that. With the stock listing on the NASDAQ, we're going to see a lot more eyeballs on this tech company. And you know, all those Robinhood and M1 Finance investors love tech companies with super high growth ahead of them, especially small cap companies. And I think Docebo could fit the bill of some of these investors in the US, or a lot of them, and we could see the stock price pushed up even more and more. And what this means for Docebo going forward with a higher stock price is that they can do more bought deal offerings with less shareholder dilution and use this cash to continue acquiring more businesses or expanding their development team to make an even better product for their customers. And ultimately, as a business, you want to create the best product for your customers to make sure that they come back to you year after year and expand their business with you. And this is what Docebo is doing with their customers right now. Right now, I'm looking to buy when it's around the $65 to $70 level. I don't think we're going to see the stock drop back down to the $40 level, but maybe we'll see it drop back down to the $50 level, which is where I think there's good support there. If you guys enjoyed this video and want to check out more Canadian growth stocks, check out these two videos on the screen here. If you're there, I'll see you there. But if not, be sure to check out my website, allevegun.com, if you want to purchase one of these percussion massagers. They're awesome to use, and I highly recommend them if you're looking for a Christmas present for someone who's active or just always in pain. Keep up the grind and have a great day.